Good morning and welcome to our webinar, Know Your Numbers Part 1 with our presenter, Ben Lever, this morning.
Hello everyone and welcome to today's webinar on knowing your numbers. This is part one of a two-part series we're running that will cover getting to the basics of all things data. My name is Ben Lever and I'll be your presenter today, and joining me is Avril on tech support. For those of you that I don't know, I'm a principal consultant with Sparrowly Group, working across a broad range of areas, including small business, not-for-profits and social enterprises, technology, innovation, and agriculture. I'm an engineer by trade, and among other things, I previously founded an analytics software company, so I definitely love my numbers. Some housekeeping before we get started. Your video and audio has been disabled for the presentation, and this session will be recorded, and a link of that video will be sent to all those who have registered. This will include the presentation slides that we'll be going through and the resources that we mentioned as well. We welcome you to revisit the recording yourself at any time and share it with your colleagues to watch on demand. If you have any questions, please pop them in the Q&A box, which you can open at the bottom of your Zoom screen, and we will collate them together and go through these at the end of the webinar. If you're having any technical difficulties, issues, please use the chat box and we will respond to you directly. Now, so that you can focus on the information to come, Avril and I are going to turn off our videos and we shall get started. So let's break down what we'll be covering today. Firstly, we will discuss how data can help you to answer questions all across the aspects of your business so that you can understand where there are opportunities to make money. Secondly, we will highlight the two ways in which you can use data in your business, for looking backwards and for looking forwards. And finally, we'll focus on how spreadsheets can be used as a powerful tool for modeling data and making forecasts in your business. So let's get into it. So where can data help you in your business? What types of questions can it help you answer? Data isn't just useful in specific niche areas of your business. There are ways that data can be leveraged throughout all aspects of your business. So let's look at that in more detail. In our first webinar on business planning fundamentals, we touched on the business model canvas as an important business planning tool. And don't worry if you didn't make that particular webinar, you'll get a link to its resources in the follow-up tomorrow. Now, the business model canvas can be used to describe all aspects of how your business works. It has 9 boxes or building blocks that each describe a different business component. We can also cluster these boxes into 3 groups. Firstly, the desirability of your business. Who are your customers? What are you selling them? How do you sell it? How do you get it to them? Then we have the feasibility of your business. Who are the key people? What are the key assets? What are the primary activities? And who do you need to work with in order to make your business work? And finally, the viability of your business. How will you capture value from your customers? And how does that compare to what it will cost to run your business? Across all of these business aspects, there are questions we can ask about our business. So let's start with the financial questions, understanding the viability of your business. How much money did I make last year? Why did I lose money last year? Can I afford to hire new staff members? Should I raise my prices? What about operational questions, understanding the feasibility of your business? Do I have too many staff? Do I have too few staff? What if we were more efficient? How often are we using an asset? How much inventory do I waste? And finally, customer questions, understanding the desirability of your business. Who are my actual customers? Am I reaching those customers? Do my services resonate with my customers? What if I attracted different types of customers during the week? So these are all really great questions, but how can we use data to answer them? Well, to help us with this, we're going to break up our questions into different types. The first type of questions we will look at are those that reference the past, answering questions that require us to look backwards. Now, we've seen some examples of these types of questions. Questions like, how much money did I make last year? How much inventory do I waste? Who are my actual customers? These are all questions about the past. Now, answering these types of questions requires 2 steps. Firstly, capturing data, followed by analyzing data. The trick, of course, is that you need to capture data before you can analyze it in order to answer a question about the past. Fortunately, you are likely already capturing data across different aspects of your business through the various tools that you're already using. Let's take a look at some examples of that. So many of you will already be using accounting software tools like Xero and MyOb and QuickBooks. Tools such as these provide an immediate gateway into answering financial questions about the past. They capture data such as expenses paid and sales made. And they analyze this data in the form of reports like profit and loss statements and cash flow analyses. There are also a range of popular industry-specific software tools that, in addition to streamlining operational aspects of your business, they also capture useful data that can be analyzed. For example, Counter captures data about food and beverage inventory and sales. Tradeify captures data about quotes and jobs for tradies. And Clockify captures data on the time spent doing tasks for office teams. Similarly, we have booking platforms like Bookio and Resdy and FareHarbor, and these are useful in capturing information that can be analyzed for further operational insight. And finally, we have the platforms that you use in your business to engage with your customers, and these are also a rich source of data. So in addition to some of the booking platforms that also capture data and provide insights into your customers, we also have your hosting platform, as well as Google Analytics, and these capture data about how many people and who are visiting your business website. We also have platforms like MailChimp, which we use to collect data on the levels of engagement throughout your, when you're doing your promotional outreach activities. And there are also tools like SurveyMonkey, and they provide a mechanism for direct customer data capture. So all tools like these should be considered your first port of call when answering questions about the past. The second type of questions we'll look at are those that reference the future, answering questions that require us to look forward. We've also seen examples of these types of questions as well. So questions like, can I afford to hire new staff members? What if we were more efficient? What if I attracted different types of customers during the week? These are all questions about the future. Now, when it comes to answering these types of questions, it also requires 2 steps. Those steps are modeling data, followed by forecasting. When we need to answer questions about the future, we obviously won't have any data to analyze. The things that we care about haven't occurred yet. So because you don't have any captured data, we instead make the data up. We do our best to guess what the data will look like when it is captured in the future. And we call this modeling data. The trick, of course, is that in a lot of situations, the past provides us with a useful indication of how the future is going to play out. So if, for example, if we have captured data describing what has happened in the past, we can use that to inform how we model data about the future. For example, if your profit and loss statement from last year tells you that your insurance was $1,000, then in the coming year, it'll probably still cost you around $1,000. It won't be $100 or $10,000. So we can model our insurance expense based on the data we captured last year in order to forecast costs for this year. There are lots of examples of using data already captured to model the future. So for example, the number of lunch and dinner covers we have during the week versus the weekend, during summer versus winter, or the number of bookings you receive through booking platforms versus directly through your website or phone, or maybe the amount of time you spend on quoting a job versus paid work. So we've seen examples of tools that capture data and they can be used to analyze questions about the past, but what about tools we can use for modeling data and forecasting? Well, when it comes to modeling data and forecasting, it's hard to look beyond the humble spreadsheet. Spreadsheets are like the digital version of performing back of the envelope calculations. Spreadsheets are also extremely flexible. You can use a spreadsheet for very simple forecasting all the way through to very complicated data modeling. As you probably know, the three prominent spreadsheet tools are Microsoft Excel, Google Sheets, and Apple Numbers. In general, they are all very similar, and which one you choose to use will be determined by which platform you use. That is, whether you choose to predominantly use Microsoft or Google or Apple platforms. Regardless of which you choose though, it's very easy to share spreadsheets between the different tools. So what we're going to do now is look at some examples of spreadsheets that you can use for inspiration to develop your own. We will share these spreadsheets in the resources, but you shouldn't think of them as templates. Every business is different. So the spreadsheets you build will be unique to your business and how you think about modeling it. As I walk through these examples, I won't be covering off how to use spreadsheets. There are many freely available resources on this, and we will share some of those in the notes that we send through. So after this, I would highly recommend brushing up on your spreadsheet ninja skills. So onto the examples. I'm going to walk through three spreadsheets. Each is going to be presented as an income expense forecast. Now, this can help us to answer financial questions about the future. And this is a great place to start, as finances are a primary driver of any business. And in many cases, we can be very concrete about the data we model. The purpose of these spreadsheets are to understand the income generation potential for the business. Each spreadsheet we have in our examples are for different industry sectors. So I'll be showing an example of a food and beverage retailer, an accommodation provider, and a tour operator. So let's get started with our examples. Let's start with the food and beverage retailer. So perhaps it's a cafe or a restaurant. So in this spreadsheet, in the first tab, we are calculating a weekly profit and loss forecast. At the top, we have the forecasted weekly sales, and then the forecasted weekly expenses. And finally, forecasted weekly income before tax down the bottom. So how are we modeling all of these numbers? Well, let's begin with sales. The weekly sales forecast is calculated in the sales tab. Our model simplifies all sales into four categories: low and high-end lunch covers and low and high-end dinner covers. For each line, a forecast of sales revenue for the week is calculated, as well as a total. Sales revenue is calculated based on sale price and the forecasted number of covers. Okay, sale price and forecasted number of covers. In this spreadsheet, all the cells in yellow represent the input data for our model that we can vary, that we can play with. So for example, I can change the sale price of low-end lunch covers from say $20 to $19. The number of covers, however, is not in yellow, okay? It's modeled based on further calculations. So let's have a look at the covers tab. In this tab, we forecast the number of covers for lunch and dinner, Monday through to Sunday. We can see, for example, that the cafe is closed on Monday, okay, and also closed for dinner Monday through Thursday. We also forecast what percentage of covers purchase low or high-end meals at lunch and dinner. That's the purchase type down the bottom here. These numbers are used to determine the total covers for the four categories we just saw. Now, all of these numbers are yellow. So where do they come from? Well, remember, we are looking forwards in time. We don't have any real data, so instead we will model it. Now, ideally, we're already using a system that has captured data about covers each day in the past, and we can use that information to enter our input data, the yellow cells, for our model. For example, we can use the average covers we have observed in the past as a starting point. Now, let's take a look at expenses. Back on the P&L tab, we can see cost of goods sold, or COGS, as a key expense. This expense is obviously driven by sales, so it's computed in the sales tab also. We have COGS. Here we have the cost price for each of our cover types, a cost price. And based on the number of covers, the COGS are calculated. We can, of course, vary the cost price to understand what effect that has. All the other expenses are forecasted in the expenses tab. Now, many of these will typically be quite straightforward to forecast. For example, the cost of rent, utilities and insurance. These can all be heavily informed by what they have cost in the past. The final category is wages and salaries down the bottom here. Here we have forecast costs for Jack and Jill. They're the owners and their employees. Jack and Jill plan to pay themselves $1,000 each per week and pay the other employees based on hours worked. The number of hours they each work is tallied from a little table that's also in the covers tab up here. And this makes an estimate of the number of hours each will require working through the days of the week. Okay, so that's the food and beverage example. Let's now move on to the accommodation provider example. In this example, we use a similar structure in the spreadsheet. Okay, note that this is now an annual forecast rather than a weekly one. And its sales are from bookings, and it has some different expenses such as booking commissions. So let's dive into the sales tab. Now for this business, we model sales by dividing them into midweek and weekend bookings. Each of these have different retail rates, weekend being more expensive. Our sales revenue is then calculated by multiplying the rates by the number of forecasted booking nights for the year. Now, how is this model? Well, let's take a look at the bookings tab. There are two components in our booking model. The first is the number of rooms available in the property. It's yellow, so we can vary it to understand what effect it has on the bottom line. For example, with 4 rooms, our forecasted income is positive, a surplus. So we see here a surplus of $4,500. If we reduce down to 3 rooms, like so, our forecasted income becomes negative, a deficit here of a deficit of $28,000. And this is the power of spreadsheets to quickly run these types of scenario comparisons. The second component is a model of occupancy rates throughout the months of the year for both midweek and weekends. Again, these cells are yellow, and we could look to base these numbers on, say, historical data we've captured through our booking software. From our occupancy rates, we can compute total occupied nights, and they can be used to calculate our sales revenue. An interesting expense for an accommodation provider, of course, are booking commissions. If we look at the expenses tab, we can see that we model booking commission costs up the top here for 3 types of channels: retail travel agents, wholesalers, and online travel agents. For each, we forecast the share of total bookings attributed to them, representing 60% of all bookings in total. Again, we could leverage historical data to inform this. You'll also note that for some of the expenses, they are modeled on a per room basis, such as utilities, or on a per booked night basis, such as cleaning. Calculating variable expenses is another example of the power of using spreadsheets. As the number of rooms in the property changes, or as we change our occupancy rate forecast, so too do our costs. Okay, so that's the accommodation provider example. So finally, let's take a look at the tour operator example. Again, we have an annual income forecast, and sales in this business are in the form of tour bookings. So let's take a look at the sales tab to see how that's broken down. In this business, there are 3 types of tours that are sold. So this might be for, say, a bushwalking tour. So they are a 1.5-hour tour, a 3-hour tour, and an overnight tour. Sales revenues determined by the retail. So tours are sold on a per person basis. which is yellow, so that can be configured, and the total bookings for each tour type over a year. The total bookings are based on calculations in the Tours tab. That's where we model it. So in this tab, the expected daily packs for each of the 3 tour types is modeled. So we can see that with the 1.5 hour tour, it operates on Tuesday, Thursday, Saturday, and Sunday. That the 3-hour tour operates on Saturday and Sunday only, and that the overnight tour just operates on the weekend over a Saturday night. In the yellow cells, we have modeled each packs for each operating day across each month. And then we have also modeled peak seasons over the summer months and the shoulder period going through the winter months. Based on this model, the spreadsheet then calculates the expected packs over each month and then over an entire year, which are these totals. Going back to the P&L then, we see that our largest expense are our tour costs. So let's drill into those in the expenses tab. Each of the 3 tour types have different types of variable costs that you can see in these 3 sections here. Some are per person costs, such as meal inclusions, okay, lunch, etc. Others are per tour costs, such as the cost of a tour guide. The other key tour costs obviously are booking commissions, okay, which we have here for each of the types of tours, and these are modeled in the bookings tab. So just like in the accommodation provider example, bookings for this tour operator come through a variety of channels. So there are of course direct bookings, which we have here first, but there are also bookings through online travel agents, as well as in this case, the local visitor information center, and also local hotels. So here we modeled the proportional share of bookings each channel receives, along with their associated commission rates. So the commission for direct is obviously 0%, and we have set it to 25% for online travel agents and 10% for the visitor information center and hotels. And from this, the spreadsheet can calculate the commissions we will expect to pay across each of our tour types based on the tour bookings that we have modeled. There are also a number of fixed costs modeled in the expenses tab also, as you can see here, rent and utilities, for example. Also of note, for this business, equipment is one that is quite large also, which is quite important for a tour operator. So based on these expenses and the remainders in here, this tour operator business is forecasted to make a profit of just over $11,000 for the year. And that now concludes our spreadsheet walkthrough component of the webinar. So in the examples I have just walked through, we've only just touched the surface of what data modeling and forecasting is possible using spreadsheets. And it's worth highlighting that when taking a numbers view of your business, whether it be to answer questions about the past or about the future, it's important to start simple and slowly build in the complexity. And I like to think of climbing a ladder as a useful metaphor for this process. So, when you're getting started, you're at that bottom rung of the ladder and you want to be focusing on understanding, what data you're already capturing, data already being captured by software tools and the platforms that you're already using. The next step up the ladder is to pose some questions about the past and analyze the data you're capturing to answer them. Only then take the next step up, pose questions about the future and start to model data and make forecasts. Use captured data so that you can use the past to inform your model of the future. And it's at this point you may begin to notice shortcomings in your model of the future. You'll begin to notice that if only you had captured some other data, you could better inform your model of the future. And this is the next rung of the ladder. Look for ways to begin capturing this missing data. Finally, start asking questions across all aspects of the business. Don't just ask financial questions, ask questions about your operations and about your customers, and use these numbers to get a handle on your entire business. So this has been a very quick whirlwind tour of how you can leverage data in your business. But I think it's important that I don't leave you with an impression that your business is just about the data, that it's just about the numbers. It's not. I really like this quote: "The map is not the territory." It means that the data that we analyze, the forecasts we make, it only gives us a single, if you like, peek hole into what's going on in your business. And whilst extremely powerful, it's not the only solution to answering every question or decision in your business. So that concludes our look into knowing your numbers, how data can be used in your business. A quick recap on what we covered off today. Firstly, data helps you to answer questions about many aspects of your business, and we can use that data to answer two types of questions: those where we are looking backwards and those where we are looking forwards. And spreadsheets are a powerful general purpose tool for modeling data and forecasting. And finally, start simple before getting complicated. Start climbing that ladder one rung at a time. So might move now onto the resources. Tomorrow morning, we'll be sending a follow-up email to you with all the related materials so that you can take these learnings and apply them to your business. And this will also include the 3 spreadsheets I just walked through. So feel free to forward that email to any other business owners you think will benefit from this information. So thank you for your time in joining us today. I really appreciate how important your time is. Now, before we finish up, we might move on to Q&A. I'll turn my video back on. Avril, do we have any questions?
We do, Ben. We've got a few. So with the food and beverage spreadsheet example that you took us through, how could a business build in seasonality into their forecasting?
Yeah, sure. So as you recall, so in the food and beverage example that we did, that was only looking at a weekly forecast rather than, say, an annual forecast. And obviously it's just an example, but I guess in practice, it's probably a fairly naive example because, of course, in a food and beverage setting, it's probably most likely that there are going to be seasonality effects where you have peak months and you have sort of shoulder months as well. So I guess 2 things. The first is that certainly you could look to incorporate seasonality very much in the same way that it was implemented in the other 2 examples, in the tour operator example and the accommodation provider example, where perhaps you just sort of provide a sort of an averaging effect over particular months where you want to highlight you're going to have fewer customers in quieter periods, and you expect to sort of see 90 to 100% of your customers in those peak periods. I guess the other comment would be that it's probably useful to have a think about what's realistic in terms of the window that you're looking forward to in your forecast. So we have 2 in the examples here. We had a weekly forecast. We also had an annual forecast. So weekly is probably, as I said, naive. It's probably on the too short end of the spectrum. But then similarly, maybe in a lot of cases, annual may be a little bit difficult as well, maybe on the other end of the spectrum. And obviously there are some expenses, for example, that are easy to fairly simple to model over an annual period. So rent, for example, or insurances and those types of things. But there are, from an income perspective, it might be quite difficult to really forecast out that far into the future. So in some cases, it may be quite valuable to, whilst you might put together an annual forecast, you may want to also put together a quarterly forecast that you review each quarter as well. So that when you're only looking 3 months ahead, you have a much better understanding of what's likely to be happening, and that also allows you to incorporate up to the minute information about what's happening in your world, and of course, things like bushfires and global pandemics are certainly things that you can factor in, which you probably won't be doing if you're sort of looking at a 12-month window.
Great. Okay, so how can Xero or MyOb or QuickBooks or an accounting software interact with these forecasting spreadsheets?
Yeah, so I think all of those sorts of platforms are really, really powerful. And I think the first way that they can help is that you can use them to look at actual expenses and actual sales revenue from the past, and use that to inform your models of the future. One thing that I recommend to people is when you're trying to forecast out your expenses, often we forget expenses when we're doing that forecasting activity, and going through every single line painstakingly from a statement that you pull out of Xero or MyOb is a really great reminder of what all of your expenses actually are, and typically you find a whole bunch that you hadn't thought of initially. So the second way in which we think about how these tools like Xero and MyOb can interact with a spreadsheeting system is that these tools also provide functionality which allow you to upload your forecasts into the platforms, so that you can actually do comparisons around, as time progresses forward, do comparisons of your forecast versus what actually ends up happening. And that provides a good reporting mechanism to really understand how accurate your forecasts are going.
Great. Okay, so if I'm a new business, don't have any of that historical data to look back on, how can I try and plan and build out to start to forecast where things might go, and where else could I source some data to make these financial decisions?
Yeah, that's a really important question. So I guess the first thing I would say is, just because you're a new business and you don't have the historical data, that's no excuse for not doing any forecasting. If you cast your mind back to that business model canvas, and we talked about desirability, feasibility, and viability, it's very important when you're starting out a business. You want to make sure that you think it's going to be viable, and doing some of those calculations, whether it's on the back of an envelope or in a spreadsheet like we showed some examples of, is just critical. So then the second part of this, which kind of goes to the actual question, is around, how do you actually make up the numbers that you're going to put into that spreadsheet, or put into that right onto the back of the envelope. So I guess the first thing is I would start with the expenses. And I think if it's not your first business and you've run a business before, you probably already have an idea of the type of stock standard expenses that you need to be thinking about, and it's just a case of enumerating out those. If you haven't run a business before, there are plenty of resources out there, or people to speak to, that can, I guess, guide you through what those stock standard expenses are. When it comes to, I guess, the expenses that are specific to your type of business, in that situation, you should look to lean on your network, or lean on your peers, and speak to others in the industry that are running similar types of businesses, and get a sense from them as to what sorts of costs that they're incurring. And then I guess that then leads us to the revenue side of things. And for that, I guess there's two parts. The first is really around your pricing. And so for your pricing, you can, I guess, begin with basing your pricing around what other similar service providers or other business and services as a starting point. And from that, you want to get a sense of, is your business viable? Of course, you don't want that to be the only sort of point at which you're sort of determining your revenue. You want to obviously start speaking with customers and getting feedback to potential customers in this case, to get a sense of whether that pricing makes sense. The second part, of course, is estimating how many customers you're actually going to have, whether it be over a quarter or a year. So obviously you can make an educated guess, but I guess the other way that you can, the way you can inform that educated guess is you can again speak to others within the same industry as yourself. You may want to tap into perhaps public research that exists that give you a sense of how large your customer base may potentially be, and how many of those customers you think you may be able to tap into. And again, making those guesses will help you understand whether your business is going to be viable. So for example, if you're very optimistic about the number of customers you're likely to acquire, but then your forecast still says you're not going to make money, well then you have a real problem there. You have to look to how you can resolve that. But better to do that up front in a spreadsheet or on the back of an envelope before you actually open up your doors.
Yeah, exactly right. Okay, what are the first questions that you would ask when reviewing a business's data for the first time?
Yeah, sure. So I guess a little bit like what we did in this webinar with the examples, I would start with the financial data first. And I guess there's probably two reasons for that. I guess the first is that you're gonna have to do that anyway for tax reasons, and obviously using platforms like Xero and MyOb these days, they support you in paying your bills and paying your staff and those sorts of things. So it's something that you're more than likely going to have in place anyway. So it's already a centralized point where you're going to be collecting data. Okay. And I guess the second reason for focusing there first is that, in the early days of your business, whether or not you're making money, whether it's a viable business, is going to be the lifeblood of you staying alive. So every decision that you make is going to have effects on the bottom line, literally and figuratively. I guess from there, you've kind of got the operational type data and the customer related data domains that are worth investigating next. For most businesses, it's probably going to be on the customer side first, where there's actual, centralized points where data is being collected, namely things like your website or channels that you're using for marketing. Mm-hmm. And so I would go to there next. And then I guess finally, I would look at the operational side of things thirdly. But that's probably only going to make more sense as I guess the size and scale of your business increases, and there are more moving parts that are more difficult to keep in your head at the same time, and therefore data can help you understand that. Sure.
Okay, and our last question, where should a business owner store their data that they collect?
Yep. So again, if we think about the types of platforms that exist that are going to capture data for you, things like your accounting platforms, your website and marketing platforms, and other platforms. I mean, all of these platforms that are collecting data, they will store the data for you. And most of these are sort of cloud-based things. Mm-hmm. And so that'll get stored in the cloud as well. So that's kind of like your first sort of layer of data storage. If you're of the, I guess, paranoid sort, or just sort of like to, make sure everything is safe and sound, there's also can be value in going to those platforms and trying to download the data as, say, an Excel file or what's known as a CSV file, a comma separated value file. And you can use that as sort of like a backup of your data that are being stored in these cloud-based platforms. Mm-hmm. And so that's for the platforms. And then I guess when it comes to if you're using spreadsheets and those sorts of things to do your forecasting, then I guess similarly you want to make backups of those spreadsheet files as well. And I think in sort of the 21st century, you'd be silly sort of not to look to some sort of cloud-based backup solution for that. So obviously, if you're using, say a Google Docs, Google Sheets type system, that's automatically sort of backing things up for you. But yeah, important to back things up.
Sure.
So I hope that helps.
It does. That's it for question time. So over to you to wrap up, Ben.
Terrific. So thanks for all the questions and tuning in. Feel free to get in touch if you have any questions, and my contact details can be found here on the screen. So our next webinar in the series will be hosted on Wednesday, the 18th of November, or 30, and it will be on Knowing Your Numbers Part 2. And this will focus on conducting a business financial health check. And we'll send through the details to register for it in your follow-up email, and they'll be hitting your inboxes tomorrow, as well as the links to register for our other upcoming webinars, which you can register for as well. So thank you again, and enjoy the rest of your day. Thanks a lot. Thanks, April.
Bye.